Well, folks, it was the big day, big Fed decision, Jerome Powell. Everybody's talking about it. Man, we have some things to get into today's video. Thanks for joining me as always, okay? So before we even got to the point where the Fed made their decision, Jerome Powell came out and spoke, right? The thought process was the Fed's not going to raise, and Jerome Powell's going to have maybe a little hawkish commentary, right? And so the market was trading just fine for a bit. And next thing you know, the Fed announcement comes out. Hey, they're not going to raise, but they're saying, guess what? We got more raises coming likely later this year, including 2 more, okay? And so next thing you know, the Dow's, plummeting hundreds of points in a matter of minutes. Like in a matter of minutes, Dow's down 100 points, another 100 points, another 100 points, quickly, right? And all of a sudden, you're like, what the heck is going on, right? And people, I'm seeing messages out there. Does the Fed want to crash the market? What's going on here, okay? Because the market's just sinking, and it's sinking rapidly. And you got to ask yourself, like, is this the humans that were out there freaking out? No, okay? That was not the human sell-off. That was our beautiful artificial intelligence selling the market off there, okay? That was thinking to the abyss we go. Because machines don't know the difference between if somebody's telling the truth, if they're kind of telling a white lie. When they see the Fed release a statement that says, yeah, we're not raising, but we're going to raise several more times, it's going to sell the market off immediately. And it's going to sell it off quite heavily. And then the humans are going to step in and say, what are you doing? There's a bunch of BS. Don't believe this. They're not going to do that, okay? They're not going to raise 2 more times this year. That's not going to happen. What are you doing, you stupid machines? Why are you selling off the market, right? A machine doesn't know the difference. It just has to, it reads the document and says, this is blah, 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 so I need to sell. Or, and that's a lot of the market now today, right? It's driven by machines, and they can make these very insane decisions and very questionable. So everybody was thinking to the abyss. And then what happened? He came out, Jerome Powell, and here he goes. And what did he have to say? Well, that man said that they got a long way to go to defeat inflation. He didn't come out, run a victory lap around inflation, nothing like that. He says, we got a long way to go. He says, we're going to have to take rates higher than we're at now, okay? He says, don't get excited because, we're just basically taking this, pause or whatever you want to call it here, okay? Or skip. That's what they call it, a skip. We're taking this skip. Don't get too excited about that. Don't get too excited about that, okay? Because we're going to still keep raising. He also said, guess what? No one at the Fed says we're going to have rate cuts at any point this year, okay? Which is another kind of hawkish signal out there. So this man went over to the moon in terms of trying to make sure everybody is at bay here. No one gets too excited. We're going to keep rates high for longer. We got a long battle ahead with inflation. This is not even close to being done, which to me is not surprising. This is exactly what I thought would happen. You watch yesterday's video, it's exactly what I thought. I thought he would come out, he would say, we're not going to raise, and he would come out and he would just, have this stance of like, we still haven't won, we got a long way to go, and he's going to try to talk the market down. That's what he's going to do. He can't announce victory right now. Although inflation's, in terms of the rate of increase, has been coming down dramatically for about, 9 months now or so, somewhere around there. He can't come out and say we've won, because the bottom line is inflation is still too high. I mean, shoot, inflation might be coming down for almost a year straight now, right? He can't announce victory right now because we're still at, let's say the government numbers, CPI was 4. He wants to get us to 2. So he can't come out and say we won because we haven't technically won yet. The battle's getting there, but we haven't won. And so he likes to take this super aggressive stance on, this and that. But at the end of the day, I don't know, okay? Because here's the thing. Truflation numbers now have us at 2.5% as far as CPI goes, right? Now, truflation numbers recently have been a little lower than whatever the government numbers have been, okay? So, for instance, truflation had us last month mostly in the 3s in terms of their CPI. Government number came in at 4, okay? So, my guess is truflation had us pretty much this entire month in the 2s. So my guess is government numbers probably next month will come in at 3.1 to 3.5, okay? Which gets us even closer to winning this battle against inflation, right? So that's a very important component of this whole game. The game is look at the scoreboard. We're starting to, look pretty good here, okay? But the next thing you gotta ask yourself is, did the market itself take Jerome Powell's comments? Did it take the Fed's stance even serious whatsoever? And in order to understand that, you have to look at a few different sectors that matter in a significant way. And this was what I was really curious about. So I said, I want to go through several different important sectors, and I want to see, like, did they buy what Jerome Powell was saying today, or are they like, this is a bunch of flippin' flapjack and BS, okay? In the first place you're going to want to look to have something to understand this is whatever's been the hottest thing in the market, look at that to see if there's any sort of correlation in its buying it, okay? So what are we going to look at? We're going to look at the AI stocks, right? The hottest place you've been in the market, right? If the market was taking serious Jerome Powell's hawkishness and his talking down in the market, and we got a long way to go, we got more hikes coming, blah, blah, blah. If it was taking it serious, I can tell you all these AI stocks would have been down big today. Big, big. Because this is what is seen as the hype, the overvaluation, and we'll see if that even is true, right? But this is what everybody talks about as bubble. And so this has also been a huge profit center, because if you own any of these stocks, which I'm thankful I own several of these, right? You've been making tons of money. So these are the sorts of stocks that would have sold off huge today if the market actually believed anything that Jerome Powell was talking about and anything the Fed's up to here, okay? Look at NVIDIA. NVIDIA was up almost 5% today. Oracle had almost a 5% day. AMD was up 2+%. Mr. Softy, Microsoft was up today. Meta was up today. Adobe was up today, right? Google and Amazon were around break even. Palantir was down very slightly, and Tesla was down very slightly. So based upon what AI stocks are saying, we don't buy it at all. Whatever the Fed's saying, we don't buy it at all. Next place I want to look to see I want to look to banks. Jerome Powell, the Federal Reserve, is almost seen as daddy to the banks, right? That's the way it is. So I want to look to the banking sector and see, is the banking sector worried at all about Jerome Powell's comments, interest rates, anything like that? Because obviously, if rates are going to go up more and more and more, if you were to assume that, that's more of a scary thing for the economy. It also can mess up many various things in banks. And what I'm seeing is not really. SoFi was up today. Deutsche Bank was up today. By the way, congrats SoFi shareholders. It's been a hot past 1 to 2 months for you guys. You've been making some money there. JP Morgan was around break even today. Citi was down a little bit. Bank of America down. Goldman Sachs down 1%. Wells Fargo down 1%, right? The only thing I see in banking that took it somewhat serious is the regional banks. But keep in mind, because the regional banking index, KRE, which you might want to add to your watch list at some point in time, KRE was down about 3% today. But let's be honest, this is what's most likely to be scared, okay? And so regional banks have been such a worry spot that if the Fed comes out and says anything about raising rates even more, people get scared of. It's the easiest thing in the world to scare. The easiest thing. It's the one to pick on the most, okay? If you're the Fed and you're saying rates are going to go up even more, even if that's not true, people in regional banks get freaked out because we've already seen several regional banks collapse, right? And basically go under. So that's when you see that down, I can't even say it's taking it that serious. It's just like, it's very easy to scare those guys, okay? Very easy to scare those guys. Housing stocks. This is a great one to look at. If you believe that the Fed's going to continue to raise several more times, there's a good probability mortgage rates could go up more, which would hurt housing even more. And what I'm seeing is not taking it that serious, okay? Pulte Home down less than 1%. United Rentals, which is kind of a construction play more, down less than 1%. KB Homes down less than 1%. Lennar was down 1%. Lowe's was down 1%, right? RH down about 1.5%. D.R. Horton was down a little less than 2%, Toll Brothers down 2%, and Century Communities down about 2.5%. When I look at those stocks, those have been really hot stocks. They're looking for, people in those stocks are looking for any reason to take some profits. Because with home builders, it's not like the AI stocks where you can see revenue going to, another $10 billion of revenue, another $20 billion, $30 billion, $50 billion, right? It's not like you have unlimited room for growth. With housing stocks, there's a very specific, limits to that industry. You can't just keep building homes for all of infinity, okay? There's very big limits, and then the economy goes through a down cycle, unemployment goes up, and guess what? Housing usually, has a much slower period for sometimes several years. And so, I think people are looking for reasons to take a profit, and that's all I saw there. So I don't even think housing was buying it big here today. I mean, honestly, if housing was really that scared, you would have saw these stocks down 5 to 10% today. If they were really that worried about what Jerome Powell's up to and, oh my gosh, he's going to keep raising, he's going to devastate the economy, mortgage rates are going to go up even more, we're screwed, okay? Oil and gas stocks, another good sector to look at. And, you know, oil and gas stocks were kind of all red today, but let's be honest, these stocks have been red for a while. They can't do anything right. I mean, it seems like the market goes up, these stocks go down, the market goes down, these stocks go down. These aren't in favor of the market. That's the bottom line with that, right? You know, if you go back to last year, at this exact time last year, everybody on Wall Street said you need to pile into oil and gas stocks. It was 100% the worst move you could make. And I called that out a million times on the channel, but you know, people still decided to make that decision, and it was such a questionable decision. And when it comes to oil and gas stocks, here's the thing. They need the global economy to be in a much better place next year and the following year if you're going to see a recovery in these stocks. If you're at all worried about recession, these stocks aren't going to do good. And bottom line is, you know what happens in a recession. There's less demand for oil. That's just how this game works. And so, you know, the bear case last year made no sense because they were bearish on the economy. They thought everything was going to get devastated. And yet a lot of these people wanted to pile into oil and gas stocks. And it's like, look at history. History is going to tell you if the economy is doing bad, oil price is not going to do well, and oil and gas companies are not going to do well in that environment, okay? And so there was like the bear case made absolutely no sense from that standpoint last year. It was almost laughable. Next thing I want to look at travel stocks. What are travel stocks doing? Are they buying anything? They bought nothing of what Jerome Powell was saying here today. Absolutely nothing. Southwest Airlines was up 3% plus. American Airlines was up today. Carnival Cruise Line was up. That's been a pretty hot stock recently. Delta was up. United Airlines was up. Airbnb was up, right? Ubidi Booba and Wynn were just down slightly. Hawaiian Airlines down slightly. They didn't buy a thing that Jerome Powell was spitting out here today, okay? And what the Fed was talking about. The conclusion is the market no longer cares about talk. Hawkish talk, dovish talk, it doesn't matter anymore. A year ago, this mattered in a significant way. This just proved that the market doesn't care what Jerome Powell says. The market believes that the Fed is likely going to lower rates before they raise rates anymore. Why is this? Well, inflation keeps coming down. It looks like it's going to keep coming down, so it makes no sense for the Federal Reserve to keep raising rates, given that CPI is going to keep coming down, keep coming down. If we saw a huge trend reversal, where all of a sudden CPI goes back to 5%, 6%, it's a whole different scenario. Then actual rate hikes could be on the table again. But as long as we continue to see, next month all of a sudden we see something in the mid to low 3s, the next month maybe high 2s, there's no need for the Fed to raise rates anymore at that point in time. You're at a Fed funds rate right now, it's 5% plus. And if you have inflation coming in your 2% target, there's no need to raise rates anymore. That would make, that's how you get fired. They would fire Jerome Powell for that. Like straight up, like he would be out. That's the bottom line with that whole situation. He would not be nominated again. And I can tell you, the folks that are at the Fed would be removed. So just do keep that in mind. It's not like they can just do whatever they want. They do have people they have to listen to. It's supposed to be a separate entity, but all I'll just tell you guys, they have people they have to listen to, okay? Yes, indeedy, okay? So, the market no longer cares about what Jerome Powell has to say. That's the bottom line with that, okay? Now, this matters in a significant way, folks, okay? Significant way. Health insurance stocks slide after United Health warns more surgeries will drive up medical costs. Health insurer stocks dropped after United Health Group warned higher medical costs as older Americans start to catch up on surgeries they delayed during Rona, right? Because a lot of people were kind of freaked out during Rona. They didn't really want to go to the hospital. They didn't really want to get surgery. So a lot of people put off surgeries that they honestly need. They've been putting off those, and that's coming to an end now at this point in time. Shares of United Health, Humana, Elevance Health, CVS all declined. Insurance companies have benefited in recent years from a delay in non-urgent procedures, but that trend may be reversing, right? And this is just one of many reasons why I felt like if I wanted to play against an index for a hedge this year, I wanted to do against the Dow. And it's been 100% the perfect play. The NASDAQ, you have not wanted to work against that. A lot of people try to talk me into betting against the NASDAQ. I'm like, hell no. No way, okay? S&P 500, no. The Dow's made it was by far and away the best choice for me if I wanted to work against an index for a hedge. And one of the reasons was I looked at United Health. It's by far and away the biggest weighting. And United Health's been making money hand over fist, okay? This has been actually one of the best stocks in the Dow Jones for the past 5-10 years. Stock's been doing terrific. It's a healthcare company. What I can tell you in regards to healthcare companies is they are not seen favorably when they are making money. If you're NVIDIA, you can make as much money as you ever want, and no one's going to judge you for that. If you're Apple, you can make as much money as you ever want. When you're what is seen as a need, as in healthcare, there's limits. And when you start making too much money and you're in healthcare, the government's going to come after you, okay? That's a whole other risk that's still out there for United Health. But now they got this other risk of like people basically going in for these procedures that they just hadn't been going in for before, right? And next thing you know, the health insurance company has to pay $30,000, $50,000, $100,000, $150,000 for these surgeries that, you know, people have just been kind of pushing off because it wasn't like it was urgent. It wasn't a life or death. It was kind of like, this is very inconvenient. Now I got to go get this, okay? And that's a huge issue, and that's going to be an issue for kind of the Dow, at least in the short term here. And so that's just something to kind of keep in mind in regards to that, okay? Now, the next thing I want to talk about is dividend stocks. Obviously, with the Fed, everything going on there, dividend stocks are kind of, you know, something that's, a controversial issue on when do these stocks start to perform. This is the dividend-only account, right? Which this account's been built inside the private group. There's been 2 accounts built in there over time. One's the main public account, which has about $1.6 million in it. And we started that about 5 years ago or so. And then this dividend account, which was started about 3 or 4 years ago. And this portfolio has been doing pretty well until this year. And this year, it's severely underperforming the market. It's down 6%, while the S&P 500 obviously has been doing much better. And so, dividend stocks. When do dividend stocks start to perform? Okay, my opinion is dividend stocks will really start to perform again, I think, late this year and into actually next year. And the reason is you have a situation here where you can get very high rates of return on treasuries. You can get very high rates of returns on even savings accounts, okay? Now, I would say it's a much higher probability that the next move from the Fed is lowering rates rather than raising rates, especially if there's any worries about the economy. And we have CPI continue to come in place, and next thing you know, we're in the 2s, which is possible within the next 2 to 3 months. We're going to be in the 2s. Very, very possible. If that happens, and we got any sort of worries about the economy, the Fed's going to start lowering interest rates. When they start to lower interest rates, I can tell you what you're going to be able to get on savings account treasuries. That has ramifications. It works all through the chain, essentially, okay? And what I think will start to play out there is you're going to have a return of people looking for a lot of these type of dividend stocks. And so they're completely out of favor this year. I think they're going to probably remain out of favor for probably the remainder of the year until the very end of the year. And I think starting next year and moving forward, that's when you're going to see a return of money, because then people are going to be looking out there and they're not going to be able to earn nearly as much on savings account treasuries, and they're going to start looking at some of these dividend stocks that are maybe yielding 3, 4, 5, 6, some even are yielding 7% right now. And they're going to say, I think I want to put my money there. Because right now, a lot of people are looking at it like, I can get 4% on a savings account, I can get 5% on a treasury, 4 or 5% on a treasury. I don't know, why would I want to go chase 4 to 5% in dividend stock right now? Well, once that moment changes, that's when a lot of people start to favor dividend stocks again. And that's when a lot of those stocks start to see major inflows, which obviously that buying pressure leads those shares higher and higher, okay? Which ultimately then leads those yields lower and lower. But if you're a company that's profitability keeps going up, then you can keep raising your dividend yields, obviously. So, you know, my opinion as far as this year goes, I think, especially in this back half of this year, I think it's a phenomenal time to be a buyer of value stocks and a lot of these dividend stocks. Whereas last year, especially in the back half of this year, it was growth stocks for deals all over the place. Growth stocks aren't those sorts of deals now. You can still make money in growth stocks, but they're not those sorts of steal deals. The steal deals now in this market are really a lot of these dividend stocks and a lot of these value stocks. And especially if we get the market to go lower for any reason over this next few months, this is going to open up even a bigger opportunity. So, yeah, and you know, obviously the Fed's not going to keep rates high forever, especially with the government debts and what that does to the interest the government has to pay, the U.S. government has to pay on the debt, then believe me, as soon as CPI comes somewhat in where they're looking, as in the twos, and we get any sort of economic data that's anything weak, the Fed's going to be quick to cut. And there's reasons, okay? Once again, these folks have bosses. You might not think they do, but they do, believe me. I appreciate everybody joining me. As always, much love, folks. If you're looking to take your investing game up to the next level and look to apply to join my private group, learn everything I got up here, then check out the description area down there. If you want to support the channel, support my content, do so on Patreon. That's going to be in the description area as well. They'll also get to see the moves I'm making every week in that portfolio. So appreciate everybody. Much love as always, and have a great day.